I know that sometimes I might overuse the word generational in my titles, and I might say that this stock could potentially be a generational buying opportunity, and this one could be a generational buy. But the stocks I'm going to talk about today is truly having once in a generation kind of sell off. This is a sell off that hasn't happened since the company went public, about 37% from its all time high. This is a stock that's gaining a lot of traction amongst the retail community as a quality stock to buy and hold forever. And there's really a misunderstood story where the company is having its Google kind of moment when people said that Google was dead, that it's not an AI stock, it's getting killed. But now everyone loves Google because it's all of a sudden an AI leader. I see the same setup for this one, and I'm going to talk about it today. If I'm right, I believe the gains on the stock are going to be insane. And if I'm wrong, then the stock's gonna keep going down. But this stock is CSU, which is Constellation Software. Constellation Software is down 24% year to date. You could look at the chart of its drawdown. This is the largest drawdown in the company's history. This is truly once in a generation kind of sell-off, and I'm gonna talk about it today. Now, Constellation Software, it's a hard business to analyze, but you could think about it as the Berkshire Hathaway of software companies. So the company has some software companies, then they take the free cash flow and they acquire more and more of those software companies, and they take the free cash flow and they do it again, and they keep doing more and more acquisitions. And they acquire companies in niche industries where there's some kind of high barriers to entry, such as healthcare, for example, which has a lot of regulations, a lot of compliance, such as things within government kind of software, which they pretty much never change their software. So it's in niche industries where the cost or the switching cost of changing the software is so high that no one pretty much wants to change the software. And this is why CSU can raise prices and they can maintain a recurring revenue business model without really being disrupted. The company grows in two ways. The first one is through organic growth. They do have some organic growth, around 3%, 4%, 2%. It's not really high at all. Although what really matters with this company is maintenance and recurring. So they buy a lot of the software stocks. They have certain hardware kind of revenues and professional services. The company tries to focus on recurring revenue and subscription-based business model. And this one is growing 4 to 6%, but in total it's 3 to 4% organic growth. The second part is the acquisitions, of course, and you could look at the free cash flow where it went from $383 to $3 billion in pretty much 10 years, and they grew it at a 20% CAGR. But the best part about this company is that they do those acquisitions without actually diluting any stock. So since 2015, the company's shares outstanding have been the same, but if we look at free cash flow per share, it went from $18 per share to $120 while shares outstanding were flat. So that's something that's extremely rare, especially amongst a software company and just tech stocks in general. No dilution, growth through acquisition and organic, but they take the free cash flow and they reinvest it. They use some debt, but this is pretty much what they do. Now, the company has a lot of attributes and is such an amazing company due to Mark Leonard, which is a CEO, and I call him one of a kind CEO because I studied him a lot and I learned a lot from him, and he has influenced me a lot in my thinking and the things that I do. And you could say he's kind of like the Warren Buffett of Canada or the Warren Buffett of software in general. Now, this person's salary is zero. He doesn't get paid his salary. He voluntarily said, I don't want his salary. So he just postpones his salary every single year. I don't know many CEOs that don't want a salary. We have all kind of CEOs that want to more and more raises for their salary, and they keep raising the salary. This one has a zero salary. He pretty much works for free. No dilution for acquisitions. The company does acquisitions without diluting stock. No stock-based compensation. There's no stock-based compensation. You don't just get free stock for mopping the floor at Walmart or mopping the floor at Amazon or at Constellation Software. You do it with those stocks. But with CSU, they don't believe in stock-based compensation. Instead, they believe in cash bonuses. So if you hit certain growth metrics, certain milestone, you do get a cash bonus. Now, 75% of this bonus must be used to buy stock on the open market, and they have to hold them for an average period of 4 years. So 75% of it has to be used to buy stock. They have to hold them for 4 years. And in this way, the incentives of the management team is aligned with the shareholders' incentives, where the company, where those CEOs, they have so much in CSU stock that they want the stock to be higher 4 years from now if they ever want to sell those shares at any meaningful value. So they're going to work very hard to make sure the stock does well and the business does well and everything does well in general. So this is truly a one-of-a-kind CEO and one-of-a-kind culture. Now, the only problem with that is that the CEO that I just told you about has stepped down due to health reason. He was a little bit up in age, and he had to step down due to health reasons on September 25th. And since then, the stock has been going down like never before. But he did leave this culture behind him. The people that started with him at CSU, they're still there. And the culture is going to be here, and those policies are likely going to be here forever. And his successor has also been there since day one. And I believe the company can really do well without this CEO. So this is one of the reasons why the stock has been going down, is because there was a Mark Leonard kind of premium, and Mark Leonard is gone. There was panic amongst the company and what could it look like and if they're going to do something different. But I think that takes some time for a lot of investors to realize that yes, Mark Leonard is gone, but the culture is still here and the policies are not going to change. Now, there's another reason why the stock is potentially going down, and that could be a big one. And this is mainly AI. So there's a lot of talks that why would you need to pay Constellation Software to use their software if you can use AI to like code or create your own software and you could do it yourself. Just like you fix something in your house, you could all of a sudden create a new app or a new software that fits your need through AI. And that actually sounds very smart. And this is, again, why a lot of those software stocks are going down. But I always like to say that this company is not like Adobe. I like Adobe. I think the AI fears are overblown. But it's much easier to switch from Adobe than to switch a government from Constellation Software that has been using it for 10 or 20 years, or to switch a healthcare hospital with all the data and everything in it out of Constellation Software just to save a tiny percentages less that's based on revenues, because the company's revenue, whatever, if it's a government or if it's maybe a hospital, they spend a tiny, not even 1% of it on Constellation Software's software. So does it really make sense for them to take the headache, create their own software with AI to save a little bit of money and have the problems and challenges? It doesn't really make any sense. So the sell-off around AI to me is very funny. But this is what someone says on X, and I want to give him a shout out because I think that's really smart. He said there's next to no chance that a telecom or a mining business that has worked with a vendor for 10 years plus and fine-tuned the software to cater their business perfectly is suddenly going to vibe code an alternative just to save 0.1% of their revenue in software cost. And I 100% agree with that. But there's something else where I believe CSU could potentially have its Google moment. And this is that what if AI actually helps Constellation Software? Maybe it doesn't hurt it, it actually helps it. Now, if AI makes things more efficient, so if you don't need as many developers to create code and create a software, then don't you think Constellation could save on their biggest expense, which is staffing, around $1.5 billion. The company made around $2.9 billion in revenues. They spent $1.5 billion in staff. This is by far their largest expense, not even close. So if AI is so disruptive and it's going to make things more efficient, don't you think CSU could save on staffing expense? Of course it could. And if it's making it more efficient, if they're saving on staffing expenses, the company can afford to lower the price of the software while maintaining their margins to make it even more competitive against the cheap AI startup with no support team, no kind of reputation with dealing with clients. And maybe, the AI software will be a little bit cheaper than Constellation. reason, if Constellation decides to save on staffing and lower cost, maintain margins, it would be a little bit cheaper. So in the case of a business owner, does it really make sense to switch out of Constellation or to even go with the other company, the AI startup, which doesn't have the support teams, they don't have the regulatory knowledge within governments and certain things in Europe and in other places, just to save a little bit on that software, which is a tiny percentage of their revenues in total? To me, it's really funny. I mean, it's laughable. But I look at the stock and it keeps going down. I'm like, are we missing something? Like, is the market really that dumb? Is the market really making such a mistake? But it could be. I mean, it did it with Meta. It did it with Google. It did it with many stocks. And the way I'm looking at it is I'm not saying how AI is going to kill Constellation Software. In fact, it's going to make it more efficient. They're going to reduce staffing so they can afford to lower the price of the product while maintaining margins and be more competitive. So if you're getting Constellation Software, reputation, support team, all of those things, why would you put up with the headache of creating your own software just to save a tiny percentage in total? So again, the whole narrative doesn't make sense, and it's really surprising to me that the stock continues to go down. Now, in terms of the valuation on the stock, it's trading around 17 and a half times price to free cash flow. So another reason why the stock could be going down is because it was too expensive. It was trading at 31, 32 times. Now it's trading at 17 times cash flow, and no one really wants to touch it. And this is a great post from X where around 36 times people were saying CSU is a powerhouse with a wide moat and a competitive advantage. But now at 20 times or 17 times, they're saying AI will kill the business. And this is how the market works. And if the market was efficient, we would not have any opportunities as retail investors. We would just invest in index funds. But the market always gets over optimistic and it gets over pessimistic about certain situations, just kind of like what happened with Google. And I can put up the chart of Google, which that was funny to me, where Google around like 14 or 15 times EBIT, they were saying that search is dying, Google is finished, ChatGPT is going to kill Google, and all these things. Now at 26 times, Google isn't actually an AI leader. Now with CSU, now they're saying CSU is going to die because of AI. But what if it's going to be the biggest beneficiary of AI because they're going to save them on their biggest expense, which is staffing? So to me, the whole setup is very compelling. You don't see those kind of setups very often, and I'm seeing it in front of my eyes, yet the stock keeps going down, and I wonder if I'm missing something or if the market knows something, I don't know. But by now, I think it would have showed up already. And I'm not saying how AI is going to kill Constellation Software. But I think at 17 times price to free cash flow is cheap for Constellation Software, especially as it's growing free cash flow 22% on average, and it's likely going to continue to do so for a while. The company might, again, struggle with size a little bit, but they're still deploying capital and they're still doing everything right. And I like to value it on price to free cash flow, although the company has their own metric of free cash flow available to shareholders, which is mainly a metric that would show you if they want to do buybacks or dividends or acquire a company. This is the free cash flow available. But I think price to operating cash flow or free cash flow in general is a much better metric. And for me, at 17 and a half times, I believe Constellation Software is either the best opportunity of the decade, or maybe it's just a trap and the market knows something we don't know and it's going to come up soon and the stock's going to keep going lower and lower and lower. If I had to bet, I would bet on the first case scenario that this is a massive overreaction. Yes, Mark Leonard is gone. The culture is still here. The stock was expensive. It's now cheap. AI might not kill the business. It might put in some competitive pressures, but if it's going to make things more efficient, it will make CSU more efficient, which is going to help them maintain their margins while having the optionality to lower prices and remain competitive. So that was my thoughts on Constellation Software. It's not an easy stock to analyze, but you guys have asked me about it. So it was not financial advice. Hope you enjoyed it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.